Hello and welcome to the Guaranteed Retirement Guy Show. So I'm going to answer a question today, and the question is, what is an annuity period? Okay, so an annuity period is just a period of time. And when you're looking at either a fixed annuity or a fixed index annuity, they can mean different things and different consequences for those different annuities. And I'll show my screen and I'll show you exactly what this looks like. But if I'm going after, let's say, a fixed annuity, or what we would call a MYGA, or multi-year guaranteed annuity, they come in periods of 1, 2, 3, 4, 5, all the way up to 10, sometimes 15 years that you can lock in rates. And so these are periods. And you lock in these rates. If I locked in a rate for 1 year, I'm going to get a certain rate. If I lock it in for 3 or 4 years, I'm going to get a little bit higher rate, and so on. So typically, when you lock it in for a higher period, they will give you typically a higher rate. Not always, but typically. And with fixed index annuities, the period is typically, when people think about period, they're asking, well, how long is my income going to come to me? Well, it comes in forever. Okay, so when you're talking about annuity period, that payout is forever. But if you're looking for the surrender period, then it's typically 10 years. And what that means is if you decided to surrender your entire amount, then what would happen is you're subject to a surrender charge during that period. Okay, that period could be, the surrender charge could be 10% in the first or second year, and then it could go down to 5 or 6% in the fifth year, and so on. And by the time you get down to the end of the 10-year period, then your surrender charges are all gone. You can take all the money out plus all the earnings. So again, think about the periods and how long you want to tie that money up. And of course, if it's for income, the surrender charge period really doesn't matter. If you're going to use it for income, it doesn't matter at all. But it does matter for fixed annuities, where if you're locking it in for 4% or 5%, you want to know how long you're getting it for. Another period that you would use as far as annuities are concerned are period certain. Period certain is just typically what people are saying is, I want a certain amount of time where I am guaranteed that this annuity will pay out. And it doesn't matter if I die and my spouse dies, I want it to continue to pay out to whoever the beneficiary is. That would be a period certain. So you could have a period certain annuity for 20 years that pays out for 20 years regardless of how long you live or your spouse lives. So it's different than a lifetime income annuity, which will pay you out a whole lot longer than 20 years. And again, if it doesn't pay out, maybe it only pays out for 10 years because you both die, then what happens is that balance just goes to your beneficiaries. All right, enough talk. I actually want to show this on the screen, okay? So let's look at this real quick, and I'll just kind of compare. So you'll see on the screen I have different periods of annuities. Okay, I've got 1 year and so on. 1 year, it's guaranteeing you 4.15. Okay, 2 year, it's 4.7. 3 year, it's 5. And then 5.05. And then 5 years, it's 5.25. And then 6 years, it's 5.3. And so on. You can see the 7 year is 5.4. You see what I mean? You're actually getting higher interest locked in the longer you put it in. But look at what happens after this. 8 years, it's only 5.1. And then 5.1 on 9. And then 5.1 on the 10 years. So it gets to a point where maybe you have a law of diminishing returns, and you don't need to lock it in for that long, and maybe you want to have access to your money later on, roll it into something else. You could do that. Another thing to think about is this is based off of $220,000. If I raise that to $250,000, you'll notice it actually will give you higher rates. So there's a threshold. Typically for fixed annuities or MYGAs, it's around $250,000, and then they give you a little bit of bump. So you remember the other one was 4.1. This is 4.25 for the 1 year, and so on. Let's see. Look at the 7 year. Instead of a 4.25, it's a 5. Instead of a 5.25, it's a 5.4. So you can see the difference is if you put a little bit more money in, you get over that threshold, they'll pay you more. Okay, so. And again, that's locked in for as many years. If it's a 7-year period, they're going to give you that 5.4% compound every single year, and they're going to guarantee that $250,000 is worth $361,000 at the end of that period. Okay. Real quick for index income annuities, I'm going to show you those real quick because that income, of course, lasts forever. It doesn't matter how long you live. So, all right, so let's go in here and we will Maybe we'll just make this a joint payout, and we'll have them both 65 years old. If they took income right now, at least the one that won't go down, you can see this AIG one will go down a little bit after age 77. But the nationwide looks like that's the top one for immediate payout for this particular person. $14,520 for the rest of their life, guaranteed. That's joint. And of course, if they decided to wait 5 years and they wanted to defer taking their income for 5 years, it's going to be more. In fact, let's see how much more. All right, and let's just take out all these annuities that actually go down, because we want to have a level amount. Okay, we don't want it to drop after 5 years. Okay, so guaranteed highest amount forever. You can see American Equity wins out, AIG's close second. Let's see, Nationwide, you got Athene. So, all right. So now let's look at the periods. If you're thinking about a period in an annuity, when we're thinking about this, we're thinking about, all right, well, how long am I getting the income? Well, for a lifetime income annuity, it's forever. So that period is forever. Even though I'm illustrating this for 30 years, 94, 95, if you live to 110, it keeps going. Okay, and by the time this person has reached 94, they pulled out $570,000 of income from $220,000. So that's pretty good return on investment. You'll notice that the surrender value is for 10 years. And then eventually, if you were to not take income, that would actually, that would equal the account value. So right now in the beginning, account value might be $239, surrender value would be $198,000. So that's how that looks. And then when you break it down a little bit further, it shows the actual surrender charge for this particular one is 9.1% in the first year, 9% in the second year, and then eventually goes down to 1%. And then after 10 years, it's 0. So if you were to just keep that and let that grow, and you never took income, then I suppose you could just take out the $220,000 plus whatever interest you earn, which at that point might be up to $300,000, and you could just take it all out. But again, when you're thinking about periods of and how long you want to put your money in there, you need to ask yourself, is that money for just growth and I'm just going to take it out later, or is that money for income? And that will kind of determine what type of period that you're looking for in an annuity and how long you want to lock it up, or if it even matters if it's locked up. So again, we can get on a call, we can discuss, I can answer your questions. Happy to go over any question you have. And I'm not going to try to sell you anything. I just want to give you valuable information, and then you decide what you want to do with it. Okay? So go ahead and go on the comments section or on the description, and you will see an actual link to a video where you can learn more, or an actual link to my calendar, and you can get a ride on my calendar. So until next time, thanks for watching. We'll see you soon.